A single tap. A small plastic card touches a terminal. A beep confirms the transaction. A coffee is bought. A train ticket is secured. A week's groceries are paid for. This simple act happens billions of times a day. It is utterly unremarkable. And that is what makes it a modern miracle. Behind that single tap lies a hidden world. A world of engineering genius. Of bitter corporate rivalries. And a technological infrastructure so vast, it rivals the internet itself. This is the blueprint of the most successful payment machine ever built. The story of how a simple plastic card became the key to a global ledger. It starts with a piece of plastic. Rectangular. 85.6 mm by 53.98 mm. A global standard. But this object is not one technology. It is a museum of technological history. The first layer is the magnetic stripe. A dark band on the back of the card. It looks simple. It is anything but. Inside that stripe are millions of tiny iron-based magnetic particles. Each one is a microscopic north or south pole. They are arranged in a specific sequence. This sequence holds data. Your account number. Your name. The expiration date. It is a language written in magnetism. This technology was perfected by IBM in the 1960s. An engineer named Forrest Perry was struggling. He tried to glue a piece of magnetic tape to a plastic card. It wouldn't stick. His wife suggested using her iron. She told him to melt the stripe onto the plastic. It worked. That simple domestic idea unlocked the first step toward electronic payment. The magnetic stripe turned a passive piece of plastic into an active data carrier. But it had a fatal flaw. The data was static. It never changed. A criminal could copy that data with a simple reader. This act is called skimming. It created a global security crisis. A new technology was needed. The answer was the second layer of history. A small, gold-plated contact pad on the front. This is the EMV chip. EMV stands for Europay, Mastercard, and Visa. The three companies that created the standard. This chip is not just storage. It is a computer. A fully functional microprocessor lives inside your card. When you insert the card into a terminal, the chip powers on. It does not simply give its data. It has a conversation. A cryptographic negotiation with the terminal. The chip generates a unique, one-time use code for that specific transaction. This code is useless if stolen. It cannot be used again. This single innovation made cloning a card nearly impossible. It was a quantum leap in security. Then came the demand for speed. The final layer of technology is invisible. It is an antenna. A tiny strand of coiled wire embedded within the plastic. This is the near-field communication, or NFC, antenna. It allows the card to talk to a terminal without physical contact. The terminal emits a weak radio field. When the card enters this field, the antenna draws power from it. The chip turns on. It performs the same cryptographic conversation as before. But it does it in milliseconds. A tap. A beep. A secure transaction. Magnetic stripe. EMV chip. NFC antenna. 3 generations of technology. 3 solutions to different problems. All coexisting in your wallet. But the card is only one half of the equation. It is a key. The lock is a global network of staggering complexity. When you tap your card, the journey begins. The terminal captures your transaction data. It sends this data to the merchant's bank. This is called the acquiring bank. The acquiring bank does not know if you have enough money. It needs to ask your bank. The bank that issued your card. This is the issuing bank. But these two banks might be on opposite sides of the world. They do not have a direct connection. They need a bridge. That bridge is the payment network. A company like Visa or Mastercard. These are not banks. They do not issue cards or lend money. They operate a colossal switchboard. The acquiring bank sends the transaction request to the network. Let's call it VisaNet. VisaNet is one of the world's largest, most secure data networks. It is a private internet for money. Its data centers are fortresses. Built to withstand natural disasters and cyber attacks. They are geographically dispersed for redundancy. If one goes down, the others instantly take over. The network has to find your issuing bank. It does this in a fraction of a second. It reads the first few digits of your card number. This is the bank identification number. It tells the network which bank to contact. The request flies across the globe. Through fiber optic cables under oceans and across continents. It arrives at your issuing bank. Your bank's computers then run a series of checks. Does the account exist? Is the card reported stolen? Is there enough credit or a sufficient balance? Is the transaction suspicious? Sophisticated AI algorithms analyze the purchase. Is it a normal location for you? Is the amount unusual? All this happens in microseconds. Your bank sends back an approval or a denial. The message flies back to VisaNet. VisaNet routes it back to the acquiring bank. The acquiring bank sends it to the merchant's terminal. The terminal beeps. Approved. This entire round trip crosses the globe. It involves 4 separate institutions. It is protected by multiple layers of encryption. And it takes less than 2 seconds. This global machine was not built overnight. It was born from chaos. In 1958, Bank of America had an idea. It mass-mailed 60,000 active credit cards to the residents of Fresno, California. It was called the Fresno Drop. The bank did not ask permission. It did not run credit checks. Cards arrived in mailboxes unsolicited. It was a disaster. Fraud was rampant. Defaults soared. The bank lost millions. But it proved a critical point. People would use a universal credit card if it was available. The problem was creating a system that worked. A system built on trust and cooperation. This is where a man named D. Hock enters the story. Hock was a mid-level banker. He saw the chaos of the early bank card systems. Every bank had its own card. They didn't work at other banks' merchants. It was fragmented and useless. Hock was asked to manage Bank of America's licensing program. He soon realized the model was broken. A single bank controlling the whole system would never work. Competing banks would never trust it. So he proposed a radical idea. He convinced the member banks to form a new corporation. A corporation they would all own jointly. No single bank would be in charge. It would be a decentralized, collaborative entity. He called it a sum of the parts organization. In 1970, National Bank Americard Incorporated was born. D. Hock was its first CEO. This organization would not issue cards. It would not sign up merchants. It would only do one thing. It would build and operate the network. The system that allowed all member banks to exchange transactions seamlessly. It was a blueprint for organized chaos. It created rules for clearing and settling payments. It established international standards. In 1976, they renamed the system. A name that would work in any language. A name that suggested access and global acceptance. They called it Visa. A competing group of banks in California had a similar idea. They formed the Interbank Card Association in 1966. Their system was called MasterCharge. It followed a similar cooperative model. It later became Mastercard. The age of competition had begun. Visa and Mastercard were not just building payment systems. They were building global standards. They forced an agreement on the size of the card. The technical specifications of the magnetic stripe. The protocols for communication. This collaboration was essential. Without it, a card from one bank would never work in a terminal connected to another. This created the interoperable world we know today. The story of this technology is an arms race. An endless battle between innovation and fraud. In the early days, fraud was physical. Thieves would steal the carbon paper slips from merchants. They would use the numbers to make purchases. The solution was the authorization phone call for large purchases. Then came the magnetic stripe. It enabled electronic authorization. But it also enabled skimming. This security threat drove the adoption of the EMV chip. The chip was invented in the 1970s. But it was expensive. Banks resisted the upgrade for decades. What forced their hand was a business decision. The networks instituted a liability shift. After a certain date, if fraud occurred on a chip-enabled card, the party with the lesser technology would be financially responsible. If a merchant didn't have a chip reader, they would have to pay. If a bank didn't issue a chip card, they had to pay. Suddenly, upgrading became an economic necessity. The chip solved the problem of in-person fraud. But the battle moved online. The internet created card-not-present transactions. Criminals no longer needed a physical card. They just needed the number, expiration date, and the CVV code. This led to the next great innovation, tokenization. Tokenization is the technology behind services like Apple Pay and Google Pay. When you add your card to your phone, your real card number is not stored. Instead, the network replaces it with a unique token. A substitute number. This token is specific to that one device. When you pay with your phone, it is the token that is sent to the merchant. Not your actual card details. If a hacker steals that token, it is useless. It won't work on any other device. It's like giving a valet a key that only starts your car, but cannot be copied and cannot open your house. This is the state of the art. The result of a 60-year journey. From a cardboard card in a diner. To a piece of melted tape on plastic. To a supercomputer in your wallet. The next time you tap to pay, remember what you're holding. It is not just a card. It is a key to a global machine. A silent, invisible network of trust. Built by rivals who chose to cooperate. Engineered to move value at the speed of light. It is one of the great, unsung blueprints of our modern world.